the ETH merge was a huge disappointment if you're an investor. I mean, you're down huge on that. And it has.
Hello everyone and welcome to the Daily Crypto. We are joined by Kevin O'Leary today, and he will be talking about stablecoins and the future of NFTs. But before we get started, let's take a quick look at the Fear and Greed Index for today. As of recording this video, the F&G index is sitting at 24. Currently, Bitcoin and Ethereum are trading for 19130 and 1282 respectively. With that being said, let's continue with the interview.
The people that I work with and for realize that there's tremendous opportunity in this space, and I have come to the realization, just on a categoric basis, that within a decade this will be the 12th sector of the S&P, because it provides so much productivity, so much transparency, so much opportunity for all other sectors in terms of financial services, that it will find its place. We're in a difficult area now because we lack regulation, but my whole journey into it, particularly stable coins, is the frustration I have as an international investor in payment, in the absolute inefficiency and cost of moving money between geographies, which I do every day. And I've detailed many catastrophes where I'm transferring capital and it gets lost for 48 hours, or it gets lost over a weekend, or I can't find what happened to it for 3 or 4 hours, and I can't close transactions. And it turns out that banks were never good at this, and they're still not good at it.
Kevin O'Leary believes that stablecoins have the potential to be a significant game changer as a result of the convenience they bring. Transferring money from one geographical place to another has traditionally been done through the use of banks. This method is incredibly expensive for investors such as Kevin himself, not to mention the delays and problems that are associated with it. Stablecoins are able to accomplish all of this in a matter of minutes and do not require the assistance of a third party. At this point, all that is necessary to fully realize their potential is for there to be appropriate legislation in place.
Something very important happened last week when Jamie Dimon on the Hill, a manager I have ultimate respect for, I'm an investor in his company, as every fiduciary is. It's a 5% weighting in any index fund. It is the best managed financial services company in the world, one can argue. When he actually, there's no better words than to say, took a shit on crypto in front of every legislator, which was a huge disservice, but also a wake-up call to make it blatantly obvious that he was talking his own book. He can't do what you can do, and he knows that. And at some point he's going to realize that, because his clients are going to say, I want to use that service. Maybe in conjunction with what I do with you, but they're just better at what they do in a payment system. To me, it was a turning point, because we're kind of at a low on legislation. I know you're working hard along with others, along with me. There's private investors that go to the Hill. I'm one of them. I mean, when are we going to get some policy on this? Because it was a story 36 months ago that everybody understood we had to wait. But now it's becoming apparent that we are falling behind as an economy on this.
Jamie Dimon made some public statements on cryptocurrencies earlier this week, and those statements did not go down very well in the cryptocurrency world because he essentially referred to cryptocurrency as a Ponzi scam. Kevin believes that despite the fact that it may have had a negative impact on market sentiment, it has in fact opened people's eyes even further so that they can see exactly why they need cryptocurrencies in our financial systems, because traditional finance is broken. Kevin says this has allowed people to see why they need cryptocurrencies in our financial systems, because traditional finance is broken.
We cannot call our stablecoin, in my case, it's USDC, that does not get placed in a cash sweep on my balance sheet right now. It is essentially, to my auditors and compliance, a rogue currency. It is because there's nowhere they can go to get the assurances that this is
intangible.
And it should be considered cash. It hasn't broken a dollar. And I argue, well, this should be treated as cash. And they said, well, show me where.
Because the idea of stablecoins is still relatively new, there are currently no laws that have been created that are specifically designed to regulate them. Kevin claims that even though he has USDC on his balance sheets, they are not treated as cash, which they should be. Because stablecoins are essentially a digital representation of fiat currency, they ought to be handled in the same manner.
Let's talk about another area of disappointment. Again, speaking now as a crypto investor across many, many positions, I've got at least 40 different projects I'm an investor in, because I believe in diversification. I don't know with certainty which ones are going to get traction. The ETH merge was a huge disappointment if you're an investor. I mean, you're down huge on that. And it has merit, but it's not what people thought it was going to be, and it's still misunderstood. But leaving that aside, where I see a lack of adoption now is because wallets are too complicated for the everyman.
Totally, yeah.
It's a mess.
Kevin says that he has invested in over 40 different initiatives because he believes that diversification is the key to success, and no one can predict with certainty which ventures will acquire traction in the market. On the other hand, he claims that one of the most significant issues, which relates to crypto wallets, is not yet resolved. At this point in time, it is a really complicated procedure for the everyday person to comprehend and take possession of his keys.
There's a parallel path developing for blockchain that is gotten a lot of press, mostly negative, NFTs. This first iteration of apes and JPEGs, and they have basically been wiped out. I mean, it's fun, and it was interesting to see them trade for $500,000 and then just get wiped out. But there's also brands out there, and I know this because I work in certain verticals. I'm a huge watch collector, and in the watch industry, the secondary market is much larger than the primary market. Every watch that's made by Rolex is sold, and there's nothing to buy from Rolex right now, just an example. But there's billions of dollars of Rolexes that have been in the market since the 50s that are trading every day. Unfortunately, many of them fake. And so what the secondary market wants is to use the blockchain through NFTs to authenticate
authentication,
physical assets.
Yeah.
In the past year, we have witnessed a meteoric rise in the value of NFTs, with some of the more prominent brands, such as BAYC, trading for well over $500,000 for a single photograph. There are still many applications for non-fungible tokens, NFTs, despite the fact that they are nearly extinct. The confirmation of legitimacy immediately springs to mind as one of the most significant of these factors. There is a large quantity of counterfeit Rolex watches available on the market nowadays. As Kevin mentioned, the purchasers will have complete confidence in the watch they purchased if the original ones came with NFTs.
The negotiations we're all having and the discussions we're having, and I want your opinion on this, when these are used to authenticate paintings and watches and pens and jewelry and real estate and cars and all these...
All property, right. Yeah.
So what is that? Is that a security? Because I'm going to add a little nuance to it. One of the reasons the watch industry is looking at this, and there's a group of us that are in the horological societies, I'm one of them, we're pointing out to the makers, like a Patek Philippe, an FP Journe, a Rolex.
Right.
Every time the secondary market trades your watch, you get nothing.
Yeah.
And it's trading at
Right.
400% higher than what you made it for.
Yeah.
You're in the same situation that a rock band watches and happens to the secondary ticket market of a hot show.
Yeah.
Wouldn't you like to get 3 to 7%?
Yeah, I mean, it's such a
no-brainer,
powerful
right?
thing.
But
yeah.
what is that? Is that so that now that NFT authenticates, the maker authenticates that that was made in the factory, and then it starts to trade in the aftermarket. Is that a security paying a utility dividend?
Another use case for NFTs is that when the secondary markets are reselling original products for several 100% more than the retail price, the makers are not earning anything out of it. They are able to grant themselves the right to receive a royalty payment each time the product is traded on the secondary market thanks to the implementation of NFTs. Thank you for watching this video. Please take a moment to hit the like button and subscribe to our channel because we upload educational content like this on a daily basis. See you guys in the next video.